Everybody, welcome to Intermediate Accounting 17th edition video solution walkthrough. This is for Kiso, Wangan, and Warfield, exercise 1921. This textbook is authors are Don Kiso, Jerry Weinget, and Terry Warfield. The question used in the presentation is copyright 2019 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. This solution presentation is copyright 2019 to 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky and not the authors of the textbook or of Wiley. Let's go to it. So right over here, we have carry forward of net operating losses, no valuation account, no temporary differences. So prepare the journal entries for 2017 to 2021 to record income tax expense and the effects of the net operating loss carry forwards. So over here, assume basically a 20% tax rate. So basically for 2017, we're going to have income tax expense, and this is going to be 80,000 times 0.2. And we're going to have income taxes payable over here, and this is going to record income tax expense for the year ended 12/31/17. Okay, let's go to the next one for 2018. Okay, so over here for 2018, what I'm going to have over here is that when I have a loss and if I am carrying it forward, I'm going to be going through and recording a deferred tax asset. So I'm going to have a deferred tax asset, and this is over here is going to be 160,000 times 0.2. And I'm going to have an income tax expense, and this is going to be a loss carry forward. And this over here is going to be for 32,000. Okay, so to record income tax, or basically to record deferred tax asset for the year ended 12/31/18. Okay, so what I want to do over here is as of, let's just go ahead and so I've got a deferred tax asset over here, starting over here with 32 grand. Okay, all right, so let's go over here to 12/31/19. So for 2019, I'm going to have the same thing. It's going to be a credit to income tax expense or a loss carry forward over here for 380,000, and it's actually incorrect. This is going to be 380,000 times my tax rate of 20%. This is 80 times 0.2. This is 160 times 0.2. This is going to be 380 times 0.2. Okay, so this is going to be to record deferred tax asset for the year ended 12/31/19. Okay, so over here in 2020, what we're going to see over here is I am going to go ahead and record income tax expense. Okay, so when I go through and record income tax expense, what this is going to be 120,000 times 0.2. Okay, and let's just kind of go 12/31/19. I added another 76,000 over here. So my deferred tax asset as of right now is going to be 108,000. So I've got a debit to income tax expense, and I'm going to be crediting my deferred tax asset because I'm going through and I'm going to be utilizing that loss. Okay. All right. So let's go ahead and bring this down a bit. So over here for 2021, I'm going to have income tax expense, and this is going to be for times 0.2 or 20,000. I'm going to credit the deferred tax asset, because that's how I'm going to be going through and I'm going to be utilizing my losses. Okay, and this is simply going to be 100,000 times 0.2. Okay, and so then this is now going to be over here at 20,000. 12/31/20, 12/31/21. Okay, so that is this problem right over here. So to go through and prepare the journal entries to record income tax expense and the effects of the net operating loss carry forwards. There you go. In recording the benefit of loss carry forward, we don't have to go through and record any type of evaluation account. Now, what's interesting about this, and I'm just going to pause just for a moment. So I'd like to thank Wiley for allowing me to use their videos again today, and I look forward to seeing you on the next video. Have a great day.